Hey everybody, hope you had a good weekend. This is part two of a two-part video series. We talked about this on Friday. If you remember, we asked the question whether the stock market is going to enjoy the summer as much as Jack Nicholson is. Remember the pictures on Friday? Go make sure you watch that video. Quite entertaining to watch these pictures. But on part two now we want to get a bit more serious and a bit more granular. The typical U.S. election cycle for the summer months for U.S. equities tends to be quite positive. I know this is a bit of a small chart, but if you were to look at this quickly, you would see that basically June through August, very positive months for the U.S. equity market. The question I ponder is whether market breadth, thus, even matters in U.S. election years. And this is where I think we need to really look at this a bit more closely. So what I did here is a very, very simple, and I just went back just for simplicity purpose so this video doesn't turn out into a 15, 20-minute video. I went back and looked at the past two elections. So the 2020 election, which, by the way, did happen during COVID, so that's kind of a weird one, even though, ironically, the statistic ended up working out just fine. And then the year before, which is 2016. Again, this is a very near-term look back, but I think the analogy holds just well. What I did here, if you look at the green shaded areas, this is basically those 3 years. It's the current year, 2024, again, 2020 and 2016, those are major U.S. election years, not midterm election or pre-election years, actual U.S. presidential election years. So in 2016, and there's two lines here, you can see basically equities went higher. The blue line here is the New York Stock Exchange Composite, which is a broader swath of equities. It's like 2,500, and then of course the S&P, which is in orange. And clearly you can see up and to the right, months, June, all that pretty good, and then we get some pullback in September. Too dissimilar from what happened then in 2020, in an up year and an up month. What is different this year, and this sadly comes back to the same point we keep pointing out to, is that there is huge divergence in those two lines, and I'm going to zoom into these lines, so watch this very closely now, okay? Two lines are, let me repeat what they are. They are the S&P in orange, and the New York Stock Exchange Composite. Now, the New York Stock Exchange Composite is doing well this year too. It's up, it's doing well. However, it is strongly diverging here in the near term from the equity market, which really, to me, brings into question whether we're going to have a Jack Nicholson summer here in a U.S. election year for what's left of June, and then July and potentially August, although August maybe start to see a bit come back in. I guess my question really is around July and the coming sort of weeks or so. So the question is, does market breadth, and we'll find out soon, does market breadth, which is now not good, right? If you were to look at the equally weighted S&P and you look at the S&P 500, the regular one, which we keep talking about, I'm not going to bring it up right now, but you know what that looks like. It looks like this. The question is, does market breadth even matter in a U.S. election year? I don't have the answer. I don't have a crystal ball. I'm sure you can find someone on Twitter that does have a crystal ball, but in reality, we will have to find out. My guess is that it's going to get bumpier here for the next few weeks at least, and that the Jack Nicholson summer may not be so much for the stock market. We'll find out. I'm not bearish. I still think ultimately equities can go somewhat higher this year, but in the near term, I think it's worth to be a bit cautious. Make sure you tune in this week for a special market session to look at a very important part of market analysis, which is how do we find major trends, both when they start and when they end. And it's very much closely ties into what we're looking at here. We'll see you there. And in the meantime, a great start to the week.